All right, what's going on, everybody? Can you guys just give me a confirmation that you can hear me okay? It's been a while since I've gone live. My apologies. Will you guys just let me know if you can hear me okay? Mic is working okay? Before we jump in, what would you do with 20K? If you can hear me, let me know, and then we'll jump into it. What's the move in the market right now? Hey, Mike. All right, let me know if you guys can hear me okay. If you can hear me okay, we'll start going right into it. A lot of money questions. We can hear you. We got you. Great. Awesome. Awesome. What's going on, everybody? First off, happy Wednesday. That was an exciting day. Talk about an exciting week. Holy crap. I woke up, peeked at the market. Well, before I say this, I'm checking in on the market because I'm looking what's going on. But when I left church on Sunday. My dad was there, and he looked at me and goes, "I bet it feels pretty nice not having to worry about what the market's doing, right?" And I looked at him, and I was like, "Yeah, that is kind of nice." And he basically said it because he knows that I don't really have anything in the market anymore. Like once I started moving over to real estate, I moved a lot over there, and he was like, "Yeah, that must be nice right now." Now, I did remind him that there was a lot of growth in the market over the last 5 years. So I did not participate in really the growth of the market, but I didn't have to worry about my investments in the market right now. I did have a lot of people calling me though, asking what they should do. Should they sell? How bad is it? Where's the bottom? And look, there's still a lot of speculation now. We can spend some time getting into it about what does this mean, and what do I think, etc. But I'm gonna tell you what I told a lot of people over this last week. First and foremost, there's not a one size fits all. It's the hardest thing. I can't just tell you like all of you should go buy or all of you should go sell. That's not how it works. So if you're younger, it's a different game than if you're older. What I have always found being young to where my timeline is long enough that I don't really need to worry about what happens in the next 10 years. First and foremost, in this scenario, you probably want to look at what you own. And do you own stuff that is going to or potentially be just wrecked by increased tariffs, right? We saw what happened to Apple share price. We saw what happened to retailers like Best Buy. If you're invested in the market, you're not invested in individual stocks, that's a different game. But whenever there's corrections, my first move is the things that I own, do I still think they're valuable companies? And do I think they're going to be okay long term? If the answer is yes, then I typically look at it and go, wow, I can buy this stuff at a discount, right? You can finally buy something you want at a cheaper price. Now, if you're older, that's a totally different calculation. You might not have the time to let the market rebound. That changes things. If you had gains and you think that the market is just going to tumble and you are not here for it, well, maybe what fits you the best is to sell and lock in a gain before it gets worse. Then you get hit with the news from today, though. And this was why from the investors and why you saw the market so uneasy. The reason why they were so uneasy is no one could figure out really what Trump's strategy was. You couldn't it was very difficult to see if he was doing this for leverage. It was difficult to see if he was just doing this to try to get the trade deficits back to somewhat, let's call it neutral or fair. And you were seeing mixed messaging from a lot of people. So it was giving the markets no comfort on kind of how to prepare for that. And so it's been uneasy. Now, the thing about just putting tariffs on, if we were just going to slap tariffs on everyone, just what everybody needs to be prepared for, that is going to be disruptive. It's going to be disruptive for a little bit, maybe a long time. And so that was scary to the market. But then you see today, and he puts a a 90-day pause on 70 plus countries that did not retaliate against him, and then freaking tripled down on China. And so it's interesting. You're getting different perspectives. I listened to a couple today that were, basically saying that they believe that Trump is good at looking at headlines and seeing kind of how things are responding and then pivoting when he needs to. So they were kind of saying he listened. Thank God he listened, because listening to what the markets or the people want create good policy. That was their take. Of course, there's people that their take is he's just a moron. He's breaking everything. And then Bill Ackman was the one that I was watching today. And it was interesting because Bill Ackman was really sounding the alarm over the weekend that, the president has to be doing this for negotiation. What he is doing is going to create, I think he said, a nuclear winter. So he was really advocating towards getting deals done. And then today, if anybody follows him, he's brilliant. But his whole thing was basically Trump executed the art of the deal perfect and started basically mapping out that this was the scenario he was trying to get. Look, I don't know. I have no clue. When I look at this stuff, I guess I look at it through two lenses. Financially, I look at what's happening right now and what that means for real estate. That's where the majority of my money is invested. Overwhelming amount of my money is invested. That's what my business does. So I'm typically looking at this stuff first to see how that impacts real estate. And in this scenario prior to today, and look, we will see how all this plays out. But prior to today, this was kind of my underwriting of the scenario. And I'm starting with my investments. There's also a part that I look at that's just the health of America. So I don't neglect that. I'm starting on the investment side. If Trump did nothing, there were no tariffs, it was business as usual. Or maybe better put, or he was using it as leverage. I didn't think much changed as far as real estate. I think, the dynamic is still at play. There's some markets now that they have built a lot and it is correcting because there's saturation. I highlighted this about a week or 2 weeks ago that Austin rents dropped by 22% because they deregulated, they made it easy to build, and they added 50,000 units to the market. That dropped the rents. There's other markets, where I invest on the multifamily side. My storage strategy is different, but how we invest in multifamily, we go into markets that are undersupplied and that are also difficult to build in. So, all of my apartments are in Southern California. People don't like investing in Southern California because it's difficult. So that is a market I like being in. I like that it's difficult because it keeps competition out and it's undersupplied. So my calculus was, well, if California is business as usual, these investments should do pretty well. Now, what happens if tariffs get implemented? Well, I thought it would be inflationary. And inflation, real estate historically has been a great hedge against inflation because one big factor of inflation is cost of living increase. Rents go up. And so even though when inflation goes up, cap rates go up, your income goes up as well. So it tends to put you in a pretty good spot once cap rates start coming down. So from a investment standpoint, I felt like either way, the real estate that we're investing in is going to be in a pretty good spot. Now, what does it mean for us and the economy? Well, I'll tell you what, I personally am, if all of this plays out like we saw today, and this is going to be leveraged to negotiate better deals, that is what I'd prefer. I've been saying this forever. If Trump is going to use this as leverage, I'm totally good with it. If we start smacking on tariffs everywhere, I was concerned. Main reason, I think a big recession was inevitable, and I think it would have been painful. Now, you can criticize that for sure, and it's fair, and part of me feels this way anyway, that we've been in a recession for a while now. And so we are just slowing it more. But I did not see a scenario where tariffs were not going to be inflationary And if you put inflation onto this market, rates have to just continue going up. So I'm hoping that this is what we're going to see. If it is, if this all works out the way the market thinks it is now, that was a masterclass in negotiating a deal. As much as I'd want to do it that way, I couldn't do it that way. Set the whole world on fire to get yourself leverage. That's insane. If it works, that's crazy. That is crazy. So what are you guys thinking? What are you guys feeling? How were you guys? Here's a good question for all of you. I want to know your feedback on this one. For everyone who's invested, what did the last 5 days feel like? Did anybody get scared? Did anybody sell? Did anybody buy in? How's everybody feeling? I want to know what moves you guys made. Just so you know, for me, I have very little in the market. I didn't do anything. Even if I had more in the market, I personally would not have sold my holdings. But I want to know what you guys did. All right, I got a skateboarder question. As a skateboarder, please explain what tariffs stand for and what they mean in layman's terms, please. Smug234, I'm not going to miss that question. I just want to see what people did with their investments, and then I'm going to answer that. Buying on the dip was slow. I wish I bought more. Definitely felt scared, still do. That is totally fair. The crazy part is usually the best times to invest are the scariest. Wasn't scared, had faith that it was a negotiation tactic. Shark Alley, look, there's people saying that now. And, for me personally, I thought like how he was going about negotiating with Mexico and Canada. For me, I was like, oh yeah, this is all negotiation. Even Greenland, like I was like, oh yeah, dude, I know this dude's games. This is negotiation. And then when he started with the tariffs, like Liberation Day, I was like, oh yeah, this is negotiation. I'm not gonna lie, it passed that point for me. I made a video on it. I'm like, holy shit, this isn't just leverage. Like, what does this mean for us? So I started looking into what the like play with tariffs was, because my view of them has always been that it's a necessary tool, but you got to be careful with them, because I've never seen it. There's not many examples of trade wars that drive to long-term overall economic growth. So I was like tripping. If anybody didn't watch, I had a video like 2 videos ago where I did a video on an article that Warren Buffett wrote like 21 years ago that was all about this, trade deficits and basically America buying more than we make and then selling American assets to support our lifestyle, and basically how that's going to destroy us. I know a lot of people say, Warren Buffett's like, a great grandpa. What does he know now? That dude's not relevant. I don't have that outlook. Like, for people like that, I'm always going to listen to him. He's one of the greatest investors of all time. Like, no one argues that. So I was listening to him. I'm a big Ray Dalio fan. I was seeing what he had to say. And so I started paying attention. Now, in some regards, Warren Buffett started changing my mind around just what trade deficits mean. I really kind of, I think, maybe changed on. The implementation of tariffs, though, that was the part that I started getting scared about. So we'll see. We will see what's going on. I truly don't understand the logic behind why trade imbalances are so bad. We trade money willingly for international goods. Why is it bad if those companies don't buy the same amount from us? Derek, okay, so your outlook was my outlook. I had the same outlook. I for a very long time, my outlook was always we have deficits in all of in a lot of examples in our life. Like, there's a lot of people that I buy stuff from them. They don't buy stuff from me. I don't think that maybe on its face is bad. the article, the Warren Buffett article, I'm not going to lie, that one rattled me because my outlook was always, well, I would say one thing actually to that. Trade deficits aren't necessarily bad, but I like it. Like my whole thing has always been free trade. Like I want to open up trade and I want it to be competitive. And so if, let's say we create a product in America and let's say Japan creates a product and Japan's is better. Well, I think that's a case for there being a deficit there. We don't have a competitive product. What kind of changed my perspective on this in this Warren Buffett interview, and if anybody wants to read it, just let me know, and I'll put the link in my story again. Basically, what Warren Buffett was saying is, if countries aren't buying our product because the barrier for their country to buy is so steep, meaning they've got, trade barriers and tariffs making our pricing nowhere near competitive so that they're not buying us. But in turn, we don't have a tariff on them. And so we are ultimately buying all their products. They aren't buying any of ours. And we're doing it so that they keep buying our debt so that our economy can keep basically churning. We will get to a point where that runs out. And this is kind of what the Warren Buffett article was saying. If you take it down to the most basic point, if you buy a ton of stuff from somebody and they're not buying any of your stuff, you will inevitably go out of business, right? You don't make money if they're not buying your stuff, but you're buying theirs. You have to start selling other things like assets. And so I would say what I would like to see, I want to see as much of a free market as possible. Now, there's some challenges to that, right? Like when you get into pricing, there are different regulations in America than there are in somewhere like China, right? We're not doing, sweatshops and slave labor and paying them nothing to work in you can't do that in America. Because of that, we run the scenario where you might have an equal product for cheaper. And so if you're looking at just you take morality out of this and it's just capitalism with no morality. They want that. That means things are cheaper. But I think most of us have kind of a moral issue with that. We'll see how that all gets worked out. But that's a very long-winded way of saying I would prefer this thing just to get competitive. And whoever creates the best product wins. That's what I would like to see. All right. Doesn't that drive the world into isolation of raw resources where eventually warfare for resources happen? Jared, does which scenario drive us into a war? Isolation, there's a big push towards a isolationist kind of movement right now. There's a lot of issues with that, 100%. I don't think, I don't know. You want my opinion or you want the opinion that's out there? I would say my opinion, and if I could maybe frame the frustration in the best way, I would say there's a lot of people that feel like our politicians do not put Americans first. And so they want kind of the focus to go on us before it goes on others. Now, I would say in that, you're seeing kind of a group of people that are going, no, we're not doing anything with anyone else. We're just looking at us. And that's kind of the isolationist view. Maybe there's I guess this is the thing. There's always an idea and then groups that take it too far one way or the other. I think most of us, depending on, not even, regardless of the political sides you land on, I would say the vast majority of that want the focus and the priority to be on America. And then, we figure out how our involvement throughout the world looks. Now, a total withdrawal, I think, is bad. But then on the other hand, I'm not personally a globalist. I think it's important to have different countries and different cultures. And I think there's nothing wrong with doing things a certain way. I don't think we all need to be the same. That's not a value. I think everybody's the same on as far as like the value of person, but I don't think we all need to be basically a M&M copy of one another. But there's definitely, and this was from an investor standpoint, there was a concern from investors on an America First agenda. Because if you bring all goods back to America, it in theory should be inflationary. Because back to the regulation, and in this case it's good, but you get cheap labor over there, so it will be inflationary. So there were a group of investors that were looking at that, going, okay, if there's a movement to bring everything back here, and that's inflationary, what does that do to the already delicate position we're in? So I don't know. I usually land on balance. That's usually, that outlook's usually been pretty good for me. Like, what are the options? Where's the right middle point? Not always. Like sometimes you got to go heavy on one side. It's not always in the middle. But usually you're dealing with options that both have pros and cons, and you're trying to pick the best one. All right, let's get into some investing. It's because they never have. We are bought and paid for. 3 is no right or left, only an illusion. Talking about the political system. Should I pay off a home mortgage of $340K? Here's the question. Been looking for this one. Oh, and also, I'm lagging on you, Smug234. If you're here, I'm going to get to your question right now. Should I pay off a home mortgage of $340K? Or rental mortgage of $160. House is $1,400 payment. Rental would be $1,000 income. Thanks. DS Del 14. My question would be, why do you want to pay off the debt? That would be my first question. Why do you want to pay off the debt? What's your interest rate on the debt? And if you pay it off, so let's say you have a 4% mortgage, you pay it off, you're saving yourself 4%. Like, can you make more than 4% on the money that's basically the debt is sitting in, and make a higher return? I'm gonna guess so, but I want to know your opinion. Why do you want to get rid of your debt? Visited China in November for 2 weeks. No desire to live there, but was surprised to learn there's a thriving middle class. Citizens speak openly and honestly about the government, except COVID. Tracy, I've been to China multiple times. I used to go out there when I was a pro skateboarder. And I loved going out there to skateboard. For me personally, China is not my... If I didn't skateboard, I wouldn't go there again. It just wasn't my cup of tea. People were sweet. And the skateboarding was awesome. That's why I kept going back. Skateboarding was good. But as far as the culture, the food, the weather, wasn't my cup of tea. I would way rather prefer, like, some of my favorite places I've ever been. Spain, I absolutely love. Portugal, Italy, just got back from France. Japan, absolutely love Japan. Okay. I've been making Smug wait too long. As a skateboarder, please explain what tariffs stand for and what they mean in layman's terms, please. Okay, Smug, so a tariff is basically a tax that we add on goods coming into our country, and they were meant to try to either protect a segment of your economy, so that, like, let's say we had an industry in America that that we felt like it was a need for us to build. But we were buying a lot of goods coming in from other countries. What countries will do is put a tariff or a tax or a charge on the product coming in, so that once it's moved over to the shelf, the price for that product is no longer competitive from the, in this case, let's say American product, making the demand go up for an American product, and then that industry potentially growing. And so they can be used for strategic economic growth. They can also be used for leverage or punishment. We definitely see that. I would say that's what's going on with China right now. Let's see if I can find the question about the debt. 26 years old, working on my first self-storage RV facility. Been following you for a while. Love the podcast. Any advice would be much appreciated. Mike Spence, I appreciate that. For anybody that is not following our podcast that wants to, I have a little link set up. If anybody wants to check it out, you can just comment the word podcast, and I'm going to send you a link in your DM for anybody that wants to watch the podcast. Mikey, the things that I would consider for your first self-storage facility, if you're building it, are you building it or buying it? Those are two big differences. And then, when you did the research on it, what other facilities are out there? What's their occupancy? What's the population growth been? What's the rent history been over the last 5 years? Who are the major employers in the area? You really want to just figure out, first and foremost, is there demand for the product? RVs right now have a lot of demand. I would say the thing to be careful of, this is one of the challenges with RV storage, is when we go through economic downturns, the first things to go are the things we don't need. That's typically RVs and second homes. So that is one thing you do see in the RV storage space, is it is disrupted more than something like mini self-storage in downturns because of that factor. So just keep that, in mind. It doesn't mean that the next downturn you're going to lose your asset. That's not what I'm saying. But you just really want to make sure that the demand is there for this asset. If you can't make better than 4%, you have some learning to do. Yeah, right now, 4% is not a challenge right now. Mikey, what's your take on the new tariffs, and how should we prepare? Kenny Tran, I just, I did a video 3 days ago, and Warren Buffett's on the title card or the thumbnail. I would watch that video. That it's kind of starting to change my perspective. But today possibly was a big change. Today could be the beginning of negotiations, which are going to change all of this. I think that's why the big reason you saw the Dow scream the way it did today. Was it 2,700 points today? I think that's the largest growth in 5.5, 6 years in one day. If this is just going to be done for leverage, considering that what's been done so far is not super disruptive, which I think in more scenarios than not, it's not going to be, because tariffs do take some time to, even though it went into effect the other night, it does take time to get charged and work through. This might not be disruptive, actually. This China. I mean, this thing with China is a different story, but it might not be if this is just negotiating and we're going to get way better tariff deals, it's not going to be as disruptive as we thought, but China could be. All of our bonds are being sold. There's a big chunk of bonds being sold off right now. This is probably the next concern, is usually, and you saw people making this case that if things get risky in equities, they start moving into safer positions, which are bonds, right? And when that happens, they get more demand. What happens to the price, right? Or the yield? So the interesting part is today, it wasn't today, I think it started yesterday, we started seeing a bond sell-off. Now, what the reporters were reporting on, we will see what this means and if this data is correct. They were stating that it was basically hedge funds. And hedge funds were basically getting squeezed and were in for sale positions. The other thing, there's no data on this, but if we're China and America just threw 125% tariff on us and we hold, I mean, how much of our bonds does China hold? I want to say 5 trillion, but I'm not sure. Does anybody know offhand? What would your move be? Sell your bonds? Right? Like, look, I don't know if China's doing this, but that could have an impact on us. Long-term bonds going up, interest rates going up. You know, I don't know. I don't know if this is trying to add pressure onto America. We'll see. We'll know that in the next probably few days. I want the smoke, my man. Okay, let me get over to get some on YouTube. All right, you bougie. We're hating on Malto? Why are we hating on Malto? Okay, let me see what this is saying. Sorry. I gotta get this closer. We got some smoke in the comments. Give me a second. Here we go. I support you, homie. Love what you're doing, but understand Malto and Escapists are trash. I run KC. Why are you on social media? You paid, homie. So you do this for love? I have no social media, no likes or views, but I'm about to fuck this entire game up. Me and you have friends from NP. That's Newbury Park where I live. I went to TO. I'm gone, homie. Let's get the bag. You're welcome to KC. I love him. Call. Okay. It's so funny because I've got like two worlds colliding at times where, you know, I have a lot of, you know, people on here from skateboarding and then a lot of people on here for business finance. And when they cross paths, it's interesting. But, you know, you asked a question. It's actually a question that I got a few days ago from one of my videos. And it kind of addresses the same thing. Somebody asked me, oh, that's what it was. I watched a video talking about how influencers are dead and how the new thing is content founders, and that the trend started about 4 years ago where people with followings, influencers, started building brands, investing in those companies, and then using their following to grow the brand, grow the sales, which ultimately grow their equity. And I made a video talking about how I kind of stumbled into that. And the reason why I said that, some of you guys saw this video, and this is to set the ground for the question I'm going to answer. But when I started my first company in 2000, we started working on it in 2011. At this point, I don't know how many followers I had, maybe 30,000 on Instagram, 40,000. And when we started the company, I had a bunch of investors that were skaters and surfers and snowboarders, and we all had like P-Rod, I think, was like our biggest account. And Paul had, I think, like 600,000 followers. He was like big dog, right? And so we started basically promoting it on social media, and it was before ambassadors, it was before influencer marketing, and we were basically talking on Instagram about the brewery that we all owned together. And it went nuts. And then we sold it and we all made a ton of money. And then I was bought in on this idea that like a social media following could help you build brands. Now, it took me a second because when we sold St. Archer with Commune, I didn't think I was going to be front facing. Like everything that I'm doing right now, all the content, that was not my original plan. I wanted to actually be behind the scenes, just run my company and have other people be the face. And when I launched it, I couldn't get anybody to talk about money online. Like nobody felt comfortable talking about their budget, investing, where things went wrong, things they were doing. And I kind of panicked. And so I basically was like, dude, I'm not willing to let my entire marketing strategy go. I'm doing it. So I jumped out and I did it. Now, somebody asked me the question in this video when I was explaining this, why I started another company. Like, why didn't I just retire after St. Archer? And so I was going to make a video on it, but then all this stuff happened with tariffs and I started doing videos on what's going on. But I figure I'll answer it here. So when I sold St. Archer, we all stayed around because Miller Coors bought our business and then they started implementing their basically operations into our company. We only lasted about 12 months. And so we left. And, there were two decisions that I had to make. The first one was a decision that Jen and my wife, had to make, which was, what do we want out of life? Like, I know what we want out of life, like big picture, but as far as like our lifestyle goes, like, what do we want out of this? And so the choice in front of us was like, and look, just so everybody knows, like, we sold our business for, what did we sell for? 80 something million bucks, but I had investors, had to pay people back, right? So I didn't walk away with 80 million bucks, but I had enough to where we could have moved somewhere. We couldn't have supported the lifestyle we were having in California for the rest of our lives. We would have had to move somewhere, and we probably would have had to scale back and then hold there for the rest of our lives. And I think I ran the like forecast off like a 5% yield. I think I was trying to be pretty conservative so that if we went through downturns, we could still pull it. And kind of where we landed was, that's not what we want. When this happened, I was 30. How old was I? 31, 32. So Jen was 30, and we were like, we got the whole world in front of us. Like, we have our whole life in front of us. Like, let's keep going. And so that was the financial decision that we made. The second one was more me, like knowing this about me, that I'm goal driven. Like, I really enjoy setting goals and achieving them. I do not, sorry, my screen froze on Instagram. Will you guys if you guys can hear me, it's just coming up on my monitor that the screen's frozen. Will you guys just give me a thumbs up if the video is working for you guys? But for me, like, I could not just retire for the rest of my life. I would go mad. Like, I really like setting the goals, and I really like going through the process of trying to hit them. Like, it just brings enjoyment to me. And so I knew I needed to do something else for kind of my enjoyment. And then, okay, good. I see you guys. Thank you. And then the other thing is, I don't think any of us are supposed to retire. I know that's like marketed as something we're supposed to do. I don't think we're supposed to. Like, I think it's okay if you don't work your job anymore. Like, if you have a job and you get to the point where you're financially free, so your investments are paying your lifestyle, that's totally fine to step away from that job. But I don't think we're supposed to just kick it. Like, I don't think that means you spend the rest of your life at the golf course or on the beach or doing nothing. I think we're supposed to still go get involved in, it could be something you're not making money at, but I don't think we're supposed to do nothing. I think we're supposed to, like, go get involved in a nonprofit. Go get involved in local government. You see that a lot. Go mentor, right? Go help the next generation set themselves up. Go be more involved with your grandkids, or be more involved helping your kids with their kids. Like, my father-in-law retired about 2 years ago, and I swear he's busier now than when he was working. But what he's doing now, I think, is more fulfilling. He's very involved with the kids. He does get to travel more. He does ride his motorcycle. Like, he's doing fun stuff. But I'm not sure the goal should be checkout. That's where I'm at on that. Yeah, that's what I think too. And look, you have like, I don't know. You see the identity crisis followed by depression often when people retire. Why is that? Because they're not fulfilled anymore. Like, you can only go shoot, you know, even par a few times. Like, well, you got to go to the golf course every single day and do the same thing over and over. Like, you're not going to be fulfilled. Honestly, when we're the most fulfilled, it's because we're doing things for others. Like, you change somebody's life, oh, that means a lot. So I don't know. I used to like count down the days like that I don't work again, but I know enough about myself. I really like this. Like, when you're doing something you love, that's where we should be. If you hate your job, maybe that's a different calculation. Maybe it's time to find a new job. The force field, I appreciate you, brother. All right. Let's try to get to some questions here. Sorry, guys. I'm going on a little lightweight rant. All right. Jimmy, how do you see the tariffs and market volatility affecting commercial interest rates moving forward? Well, it's interesting, right? If the tariffs stuck, I think the highest probability is inflation and recession. And so in that, what does the Fed do, right? What I would assume they do, well, hang on. There's more to it, right? If there's inflation, what does the Fed do? They raise rates. This is what we experienced in 22. Thank you, all the money we printed. Then the economy slows. That's the point of raising interest rates. The economy slows, and then we see rates start to come back down again. Now, if tariffs were inflationary, but then we saw the economy fall on its face, it's a different scenario. But you got to remember there's long-term and then there's short-term debt. For real estate, it depends on where you're at in the cycle, and it depends where your maturities, when your loans are maturing or coming due. For the real estate that we do, because we develop, our biggest risk is really what happens to rates when you refi out of your construction loan. And if rates, this is what jammed up all the developers in 22, is if you started building in 2020, 2019, all your underwriting was off because rates weren't where they were and cap rates weren't where they were. And so when you completed your project, the whole market had changed. And now your project didn't value at what you needed, because cap rates are softer and interest rates are higher, so you're paying more. And the bank's not giving you as much money as you were expecting to get on your takeout. That's where the risk is for developers. So how do you mitigate against that? Well, lower leverage always, right? Some of these loans you can get like 85% loan to cost. You almost go to 90% loan to cost. Put more equity down, right? 50% loan to cost is a completely different profile than 85%, even different than 70%. And then, there's options when you're putting that much equity down. You can start looking at mini perm loans where your construction loan has, a rollover option into your permanent financing. But for me, the big things that I look at when we're doing new deals, supply and demand is the big one. And, will the apartment that I'm going to build have demand for the next 10 years? And am I going to hit the rents that we need to hit? And if the answer is yes, for me, considering we took as much off of the table that would force a sale, like, I'm less concerned about what's happening in the short run. Like, if you have a longer time horizon, that changes things. But you got to have demand for your product. Do you think it's a bad time to buy a home in Santa Cruz? If you're buying a home, I don't think there's a bad time. I think the only factor that you need to consider is, can you afford it? And are you okay being there for the next 7 years? If you're okay being there for the next 7 years and you can afford it, just go buy it. Like, and the reason why I say that I don't view a home anymore as an investment. I only view a home as my home, which has a lot of values to it. Doesn't mean you can't make money, but when I'm investing in real estate, I want that piece of real estate to pay me cash flow. I don't want to pay the mortgage. I don't want to pay my expenses. I want somebody else to do that. And I want cash flow coming in. I want depreciation that I can capture. And then I want it to appreciate. I like forcing appreciation. So I don't get those when I buy a home. I get natural appreciation. You could get forced appreciation, but most people get natural appreciation. They pay their debt service. They pay their maintenance. All that comes out of their pocket. They don't get They don't get to play the depreciation game that we play as investors. You get to deduct a portion of the interest payment, but an investment property gives you so many more tools, in my perspective. I have to say that, to grow wealth than a personal home does. So I would say if you can afford it, let's go get it. You still got that tricked out Honda? I still have it. I brought it to my buddy's shop and it's been there for like 10 months. I need to call him and pick it up. Which my wife would be so pissed if I drove that home. Can you imagine? Really enjoying your channel, bro. Becoming more financially literate through a skateboarder that gets you hype is also super dope. I appreciate that. It's funny. Every once in a while, I'll have videos that go viral beyond like my audience. And I'll get skaters that stopped following me maybe when I retired. How long have I been retired? Almost 10 years ago. And they'll like look at me and go, what alternative universe is this? Like Mikey Taylor's doing this? It's funny to see, but I appreciate that, man. Like the people that rode with me through, me being a pro skateboarder and then into starting a company and then into this company. I appreciate you guys a lot. I really do. All right, what time is it? I got a little bit of time. Is it 4:30? I got some time. Start hitting me with the questions. What do you guys, hit me with the difficult ones. Lauren, how can any middle-class person take advantage of this time in history? Good question. Okay, excuse me. The first part is going to depend where you live. If you're middle class in California, very, very, very hard right now. If you're middle class in Tennessee, Carolinas, Arkansas, there's a lot of markets out there. The cost of living is so much lower. Your dollar goes a lot further. I would say with how the housing stock is, get some real estate. I've always had the outlook with real estate, such a basic old school concept, but this is the thing that like really sold me in the beginning. There's only so much land. Like there's no more of it. Considering Elon doesn't get us to Mars, buy real estate. If the population grows, people are always going to need a place to live. Buy real estate. I think that's a great one. The second one, we are in a really exciting time as far as technology goes. Like there's radical changes happening very fast, right? Like what's happening with AI, this is more disruptive and happening faster than the Industrial Revolution. Like that could be crazy for us. Depending on how you are with crypto, that's a totally new asset class that has the potential to change everything. But I would say, like, there's a lot of ways to make money right now, especially digitally. Like, I think you can take advantage right now of this window of really AI tools that can help you be more productive until the kids get old enough and start competing with us, which is going to be brutal, or you start seeing mass adoption. But like even something like, let's see how many people do you guys think are using something like ChatGPT? What do you think the percentage of Americans are? Should we find out? What percentage of Americans are using ChatGPT? Let's see what it is. Any guesses? All right. Okay. It didn't say ChatGPT, but 50% of Americans are using AI large language models. Now, and that's a 25% increase from February. So it's growing quick. Now, the caveat there is so many of our tools have AI integrated into them, like even Siri does. So I'm sure that's a big part of that calculation. Actually, here's the question. What's the percentage of Americans that are using AI tool like ChatGPT or Grok for business use? Let's see what it says here. What do you guys think? It's going to be lower for sure. Any guesses? Yep, here it is. 15%. 15%. 15%. There is so much room to start using this that will give you an unfair advantage. I was going to, SSJ, Barber, I was going to say 30% too. There is a lot of room to start using it. We use it all the time here. Has anybody started messing around with graphic design on this thing? It's psycho. Now, I did hear this. Who's the CEO that will not hire anybody until they prove to them that AI isn't going to do their job for them in five or 10 years? That was crazy. I would say don't jump into an industry that you're planning on being there long term if AI is going to wipe the job out. I think there's a window where you can make some money doing it. Look at these YouTube accounts. Does anybody follow any of these faceless YouTube accounts? So much of that is AI driven. I heard of a friend whose wife used ChatGPT to start writing these books, and the books are cranking. They're making an astronomical amount of money. She's doing the whole thing on ChatGPT. Like, how could you use it to make or create a revenue stream? Any tips on saving on weddings? Patrick, is it a tip to save money for a wedding? Is that what you're asking? Let me know. I got married. We tried to be pretty responsible with how much we spent for our wedding. I got some tricks up my sleeves. But Patrick, let me know. Are you trying to save money for a wedding? Or are you in the wedding space trying to cut costs? Yes, pretty much. Okay, so this is the best way that I have ever saved money. It's actually the only way I've ever saved money. Okay, we were taught totally wrong on how to save money. We're taught that we make money and then we spend money and then we shouldn't spend it all, and then at the end of the month we should save. That is how we are taught to save money. That doesn't work. Maybe it works for a month, maybe two. Anytime I've tried that, I've spent all my money. Doesn't work for me. What I found works amazing is to create a process or a system so that when your check comes in, there's an automatic scheduled withdrawal that takes a certain percentage and sticks it into another account. You do this first thing. This is right when the check hits. Now, the amount you save is going to be up to you, right? The conventional, like if there is a one size fits all, it's 20%. Fire movement is going to be much higher. If it's 5%, make it 5%, but get used to this practice so that your money is going to go into another account. That's going to be your savings account, in this case, for a wedding, and then you pay all your bills after. So this is pay it first is what this does. Automate it, out of sight, out of mind, and do it before your bills come in. Now, the pushback, and there's going to be a part of this that's uncomfortable. Richest man in Babylon, that's absolutely right. There's going to be a part of this that's going to be uncomfortable because the pushback from people is always, okay, sweet, I'll save money and then I'm going to default on my bills. I'm not going to be able to pay my bills. Here's why this works so well. Because we are humans. Human behavior is, in some regards, a big challenge. And a big one is we typically don't do things or change behaviors until our back is against the wall. And so if you have to change spending behaviors, which is uncomfortable, it's not fun, like it sucks, you will typically only do that if you have to. If you run the risk of missing your car payment, missing your rent, like something that has ramifications, that is what gets you to change. Something like I don't have enough money coming in. What's going to be the thing that's going to push you to get a second job? Look, and I recognize this, that sucks. You will get a second job if it means defaulting on your bills. And so why that works, it forces action and it puts your future ahead of everything else. So Patrick, that would be the absolute best way to save. But I will say this, it is a lot easier to make an extra 10K than it is to save 10K. So depending on what you do, another option that is easier to do, not easy, easier, is look at ways to make more money. It is easier to do that. Okay, Chris, no one's forking out 50K for a wedding anymore. So for me, like, look, this was, how long ago did I get married? 14 years ago. So everything's gotten more expensive, right? Our wedding cost us $20,000. And we did get some help because my dad is a wedding photographer. So didn't have to pay for that. The videographer didn't have to pay for that. So we got some hookups there. But we spent 20K. That's probably 40K, 35K today. Yeah, I would agree with you. It's a different calculation. I would say, for young couples getting married and their parents got money, well, yeah, they're having a wedding. And I call them kids. That's how old I am now. But for people getting married now that have to pay for it, that's a totally different thing. And I agree. I think most people are choosing to just get married very small, have like a party with some friends, and maybe go on a honeymoon. But I'm seeing a lot of people just save money. I'm seeing people ask for gifts in money so that they can save it for a house or something like that. So I would agree. I think that's a sign of the times we're in. I mean, inflation really freaking wrecked things here. Wedding is one day. The marriage doesn't last longer with the more you spend. Bobby, that is a fact. Holy cow. That's right. If you're going to get married, I'd really invest in premarital counseling. That was one of the best things my wife and I did. And for anyone who's dating that wants to get married, I'm going to share this with you. And I am not an expert in this by any means. My wife and I still struggle today. Being married is hard, right? But it's good that you know this, that being married is hard. The things that I found that have really helped, Bobby out here, married 25 years. Congratulations, man. That is something to celebrate. I'm celebrating my 15th year. Is it 15? Oh no, holy cow, it might not be 15. I got married 2010, July of 10. So yeah, I'm coming up. I'm 10 years behind you. So look, if you're going to get married, if you're dating somebody and you guys never fight, like never, that is not normal. It's very normal to fight. The thing that you want more than anything is conflict resolution. How do you guys work through your issues? That is massive. Some of the best things that I was told before we got married, you can have different personalities. You want to be aligned on your morals. That's a big one. If you guys are not aligned on your morals, when you have kids, it is going to cause problems that lead to a big percentage of divorce. So you want to be aligned in your morals. And then I would say another thing, it's really easy for us to look at the person that we're married to and be mad at all the things they do wrong. And so it's easy to get in this selfish outlook of why don't you just change? When it comes to marriage, if both of you are more selfless, that helps a lot. It really does. But conflict resolution is a big one for me. Don't get married. You don't need the government involved in your relationship. Joey, I think I understand why there's a big move away from marriage right now. Before I answer this, it seems like Gen Z aren't going to line up to get married, and certainly not Gen Alpha when AI takes over. So I totally get why people don't want to get married now. I mean, when you think about it, like the divorce rate is through the roof. The benefits to a lot of people don't seem worth it. If something happens, you hear all the horror stories of bankruptcy and, assets getting taken and all of that. I would say it totally depends on your framework of what marriage means. If you are looking at marriage as just a certificate that the government gives you to acknowledge that you two are married, that's it. I agree with you. But for me, that's not my framework. Like, my view of marriage has always been, the first time we ever heard about marriage was through the Bible. So I have a biblical view of marriage. And so the value I get out of it is through that lens. It's not through the government lens. So I would say that's really I think the bigger deciding factor is, why are you getting married and what is your view of it? I don't think there's anything wrong with eloping and celebrating at a later date, just having a dinner, or getting married at a family friend's property. Nothing wrong with that at all. What do you think about rent rewards? Rocket recently started putting this out there. I've been working on a project where rent becomes worth something long-term and creates a path to home ownership. All right, gang, I'm going to tell you about an idea that I had 7 years ago. We tried so hard to get it work. I couldn't get it to work. We wanted to do this through our company, but we wanted to create a incentive so that when we had an apartment, and let's say your rent was $1,600, right? We wanted to have a program that you could opt in for, where instead of $1,600 a month, it was $1,800 a month or $2,000 a month. So you were committing to putting an extra $400 in every month, and that was buying you equity in the apartment you were living in. So I had this whole idea of like, dude, how sick would it be if the tenants that lived in the apartment actually owned the apartment also? And I was so stoked on the idea. We could not figure out a way to do it through the regulation of the SEC. Really wanted to do it and could not find a path, but I would have loved that. I think there's a huge opportunity in that. If prices are where they are, and it's in a lot of markets getting unattainable for homeownership, finding ways to give ownership in other means is going to be valuable. I think that's going to be really cool. Can you do a switch heel for us real quick? I don't have a board on me. I've got dress shoes on. I might have to just do a video and do it. All right, how much long? Okay, I've got 5 more minutes. If you guys want to ask any questions, ask away. Make them hard. Let's get deep. I got 5 more minutes, so I probably got time for a few more questions. What is the best strategy to save for retirement if you are self-employed? If you're self-employed, like what I did in the beginning, I had a SEP IRA and I had a Roth IRA, and I would just put money into those every month. And then I started investing beyond that in the market, And then I got in I had my first real estate investment, and then I started just falling in love with it. Started investing heavier and heavier into real estate. But retirement accounts that are, tax incentives, 401k is a little bit different, but Roth IRA is such a powerful one. If you could use a VA loan, how would you utilize it? I would do a house hack with a VA loan. I think you could do a VA loan for a fourplex. I would do a house hack with a VA loan all day long. But I think you're limited to how many you use them. I've never been able to use VA. And I think you're limited. I think you can only do the property you live in, I believe, right? What are my limitations to a VA loan if I wanted to, let's say, house hack a quadplex? Do I have to live in it? And what happens when I want to move out? I can keep that loan, but I can't use a VA loan after that. I believe that's the case. Let's see. All right. You occupy one of the units. Property meets VA appraisal and conditions. Do I have to live in it? Yes, I have to live in it. I have to live in it after 60 days. Typically need to live there for at least 12 months to set. Okay, so that's same with the FHA loan. Fill the initial occupancy requirement, move out, and convert your unit into a rental. Great. Can I use a VA loan again? Yes, you can use another VA loan, but with some conditions. If the loan is a quadplex, is smaller than your full VA entitlement, you may, you can restore your entitlements. Okay, it's one property. I take out a business loan or a HELOC on my home for my business I want to open, barbershop. Well, SSJ, it depends. If you can get a business loan, well, yeah, if you can get a business loan, I'd probably say get a business loan. The only reason I say that, and I'm not telling you not to take out a HELOC, but my perspective on homes is that it's just a home. I don't look at it as an investment. Because of that framework, I typically don't pull out leverage or add more leverage on top of it. That's more of an investment strategy. But I understand I'm probably the minority on that outlook. But I would say try to get a business loan first. And then if you go with the HELOC, don't over leverage. Make sure it does not put yourself in a position where you have to let go of your house if the barbershop doesn't work. Frieden 09 in Maryland, if you can afford it, right? You can afford it, and you would not be devastated being in there for the next 7 years. Yeah, buy the house. There's just the second you can afford it and you have that time horizon, go buy it. If you are buying it and you need it to go up in 3 years so that you can sell it, that's a different thing. But if you can afford it, yeah, I would go for it. Easton, big one on buying your first storage property. I would say big thing we see is the broker will present you with the OM, and they'll have their underwriting of the revenue and the expenses and the NOI from the property. That doesn't mean shit at all. You have to go get the rent roll. Have to. Get the T12, the last 12 months of the rent roll. Make sure that the revenue coming in is actually coming in, that they are stating, and the expenses are actually where they are. I can't tell you how many people buy projects, they get in just to find out that they misstated the numbers in the OM. That is a big one. So make sure you have the rent roll, and make sure you get a T12. If they give you any excuse on why they don't have it, me personally, I'm going to expect the worst then, and I'm going to use that as leverage, try to drive the crap out of that price, drive that thing down. How's the Tomorrow's Laundry tee treating you? Dang, good eye. What a legend. These shirts are epic. All right. What state has the highest excavation demand? I'm not sure, actually. All right. What's OM and what's T? Okay. The OM, so when you get into real estate, the OM is the offering memorandum. It's basically the presentation, the pitch deck, the PDF of the asset that they're trying to sell you. So I have an investment pitch deck when I'm talking to investors to invest with me. Brokers have something similar when they're selling real estate. And then the T12, you can have a T6 or a T12. It's the trailing 6 or the trailing 12. It basically just means that you're going to get the last 12 months of rent, like actual financials, or the last 6 months of rent. You really need to know that in real estate. And sometimes with storage units, especially with your first one, the size of it, you're typically buying from like a mom and pop, and their financials aren't always in the best order. It's usually pretty chaotic. So that's just the challenge, unfortunately, to that size. For very small portfolios, when should you start paying for cost seg analysis? Lauren, that's a good question. How big are your properties? Because a cost seg is going to cost you, it's going to cost you like 10 plus thousand. And so it's got an expense to it. I think it just depends on how valuable your asset is and how much depreciation you can actually capture up front. Maybe the answer is going to be, the big expectation is that 100% bonus depreciation is coming back. That might change your calculus. But if you've got an asset that's worth 100 grand, 150 grand, it might not make sense. All right, everybody, 5 o'clock. I got to get home to the fam. Thank you for hanging out with me. Love you guys. Appreciate you. Have a great rest of the day. I've been slacking on going live. I'll definitely start doing this more. Have a great one, everyone.